I got a real education, Dan, of what real traders were like, how they looked at risk, the foul language they used, the abuse they gave me. But I probably learned more on that trading floor in a week than I did in a year at Sloan. And I'm wondering if you had similar experiences being on these desks, with these kind of great long-term investors. And do you think that part of that will never ever come back, those old school trading floors and some of that knowledge? So just some of your thoughts.
Yeah, well, I mean, that Bankers Trust, 92, 93, I was at Tiger Management then. And I think that, and I was sort of in charge of executing European swaption positions for Julian and the portfolio. And there was a guy there named, I guess, Stephen Hale, who was a salesman, pretty senior guy. I think he must have been the number one salesman at the firm at the time. But, many of those bankers, the Bankers Trust at that time was a breeding ground. You had Jimmy Leitner there. You had, there was a guy I remember, Quentin Van Dusselaer. You had a whole bunch of Norm Weinstein, I think. I'm actually a little younger than those guys. I'm 53. So I'm a little younger than those guys, but they, that's quite a group of people to learn from. I think that was even rare on Wall Street, to tell you the truth. I mean, of course, you had, the Goldman desks, and you had some of the other, maybe more, not even Morgan Stanley at that time. But I had a tremendous early learning experience just like that, but it was at Tiger Management. And, at the time, Tiger in 92 was a $3 billion fund. And at the time, no one had heard of what hedge funds were. And people were thinking, anytime I said to somebody, I'm working at a hedge fund, they didn't know what it was. It was early days. And again, the focus then was the ERM crisis. And I sort of had trial by fire. I was the young, 23, 24-year-old guy that they hired to come in at 3 a.m. For Europe. And I would come in and work at 3 and leave at noon. And I was executing and doing analysis as well on the European bond and currency markets. And if you recall, those are the great, days of, currencies breaking out of the ERM mechanism. And so funnily enough, the first currency trade I ever did, again, it wasn't my idea. It was Julian and my bosses at the time, but was the breaking of the Irish punt out of the exchange and ERM mechanism. And, you're in the UK, but I remember, never forget, I found some liquidity through, I think it was Credit Suisse. There was only one guy in the whole marketplace that was tapping into the Irish Central Bank and was allowing us to sell Irish punt, buying D-Mark, selling Irish punt. And never forget, had the trade on. We weren't sure when it was going to work. And I woke up on one Saturday morning early, as I did in those days, pulled out my Financial Times, and on the front page across, Irish punt devalues 10% or whatever it is. And as you know, for currency people, a 10% move in one day is just unheard of. And so, being at the front lines there, seeing how Julian positioned, how he thought about investments. At the time, my two bosses as well, David Gerstenhaber, Barry Bizzano, they ran the macro group, and I was sort of the young guy running around getting positions on for the firm. And again, the attention of the firm at that time was really almost exclusively on macro. And, you have some of the great names in the money management world who were there: Andreas Halverson, Steve Mandel, Lee Ainsley. I mean, it's John Griffin. It's a who's who of the greatest portfolio managers on the equity side. But the attention at that time, funnily enough, was really just on macro. And, it could get very heated at times. But, that's how you learn best, right? Julian calling you up at 4 a.m., asking you about a position. And, if you get something wrong, I mean, you're toast. I mean, you were completely toast. So I wouldn't say I lived in fear and panic that time, but I really enjoyed it. And that experience was sort of the defining early experience of my career. I would say even the way that I invest now and the analysis that I've done over the years and the teams that I've built to work on analysis, a lot of that was just early, comes from having that early background at Tiger, seeing the investment memos, the care, the focus that goes into building an idea, a macro idea, all came from my early experience at Julian. And so also my sort of longer term holding period. Look, it also suited my background. I'd studied history at Brown. Did a BA, MA in history, and it was really, I did what was called at the time intellectual history. So I was used to reading a lot and then coming up with a thesis. And that's basically what investment is, and coming up with a thesis that other people don't see or not, or not aware of. So my personal sort of orientation fit well with Julian's style of investment. So that was my sort of great early learning experience.
I almost feel like I was there with you. Were you part of the group that like went head to head with the Bank of England in '92 and kind of broke the pound, or were you around when all that was happening?
No, not really. I mean, that was Druckenmiller and George and a bunch of the other guys. We were not that active in the pound. In fact, after the pound went, it just made sense to us that the punt would go, because the punt was trading more with the UK than with Germany at the time. So there was a fundamental misalignment. So we kind of expressed the bet in a different way. We had a very big position in gilts and in UK swaptions at the time, after the deval, after the break in '92, we then saw that interest rates had to come down pretty dramatically in Europe, but also in the UK as growth slowed. And at the time, Germany suffered its worst recession since the war.